Good afternoon, ladies and gentlemen, and welcome to our webinar sponsored by Legacy FX. And today we're going to be discussing building your trading plan. Now, today's class is sponsored by Legacy FX, one of the fully licensed and regulated Forex brokers that provides Forex and CFD trading. Legacy has 4 different platforms for you to choose from. You can use one or all of them. You can use their web trader, their mobile trader. You can download the MetaTrader 4 platform or use their Cerex station. You can use one or all of them, whatever fits your style of trading and your needs. As you can see, their screens are dynamic and user-friendly. Everything is in a clear, concise fashion, and you can decide what you want to see and how you want to set up your screens. It's all because the Legacy FX philosophy is simple. They offer focused and personalized service that makes trading logical. Legacy FX cuts through the excessive jargon and provides financial content in a language that is comprehensive to all. They also offer an incredible education center because they believe your success is their success. They offer a full range of deposit and withdrawal methods. They have their Legacy FX Pro rewards program. They offer incredible security so you know all your trades, your information, and your funds are safe at all times. And their trading academy. Now, since Legacy FX is a regulated provider, I am required to give you a risk warning. So I'm going to read the first paragraph, and I would hope or appreciate if you could read the rest that's on your screen. Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 76% of retail investors' accounts lose money when spread betting or trading CFDs with Legacy FX. You should consider whether you understand how spread bets or CFDs work and whether you can afford to take the high risk of losing your money. Now, today's class is being recorded. And if you wish to see a recorded version of today's class, you can do so in about 24 hours by using the same link you used to come to this class. Or when investing.com has had time to edit it and clean it up, you'll be able to find it on the investing.com website, where you register for the webinar, under the education tab, and then look for webinars on demand. And in fact, there you can see all the classes we've ever offered over all the years we've been offering webinars. So let's get started talking about building a trading plan.
Throughout your Forex trading journey, you will have both ups and downs. It's easy to get distracted by the different trading methods out there, so you need to make sure you have a trading plan that you stick to, whatever the circumstances. Here are our 5 golden rules for building a successful trading plan. Golden rule number 1 is to keep it simple. You don't need to be a quant, creating complicated algorithms or game theory scenarios for every single trade you place. Simply find a strategy that is straightforward and easy to execute for your particular risk tolerance and trading objectives. Secondly, do your research. By watching this video, you're moving in the right direction. But the more you research the markets and news flow, the more fluent you will become in understanding what makes currencies move, increasing your chances of identifying trading opportunities. Third, be realistic with your goals. Simply stating that you want to double or triple your initial deposit is not enough. Learn to understand risk and reward per trade. Successful traders often have a profit and loss goal on entering each trade. Also, make sure you manage your risk. Work out how much risk is acceptable to you and take it from there. Ensure you're aware of the risk management tools available to you on your.
Now, I always start this class out with that little video presentation because it's very light. And in fact, building your trading plan is serious stuff. It's very important. I give this class, I've been giving this class for 40 years in different formats and different variations. But to me, it is so crucially important. If you came and looked at my desk, you would see index cards and index boxes. Then from there, we went on to sticky notes. And from there, we went on to all types of things. I have all kinds of binders because I've kept track of every trade I've ever made. I've kept track of all the notes and the reasons I made a trade, and I'm constantly filtering those into my strategies. And I have things stuck all over my walls. hmm I do. If you ever came to my office, you say, "Wow, how does he find anything?" Well, thank God for computers today, because today we don't have to do all that. We can put it all in spreadsheets. We can put it all in, some type of documentation. Because back when I started trading, we didn't have computers, so we had to write everything down. But then to sort it and track it and index it, and then pull it back up for research or reference later was a nightmare. You know, it used to be like library card catalogs. Everything had to have numbers and sections and everything else that you could eventually track them down. Today, every time I want to see if first of all my strategies have numbers, but if I want to see all the trades I made using strategy number 124, I can pull it right out of my spreadsheet. If I want to see all the trades I made in euro dollar, I can pull it right out of my spreadsheet. If I want to pull all the trades I made during risk adverse markets, or when we had safe havens, like for instance 2 weeks ago when Trump, you know, killed that general, okay, I can pull up my reference to see what assets I traded a couple years ago when we had another problem, and how they reacted and what strategies worked and what didn't. Okay. So today, using spreadsheets, using references, using research tools, using online tools makes this easy and makes it not so scary and complicated. But in order to become a successful trader, you do need to develop a written plan where you put all your necessary trading rules. Basically, it's your trading it's your trading bible. And there's no such thing as an ultimate plan. And unfortunately, that's what it comes down to. You know, many years ago when I wanted to start a business, and you had to put together a business plan and you had to put it all on, documentation. We didn't have all these computerized spreadsheets and all these software programs we could buy. I mean, the last time I had to help somebody come up with a business plan, we went to Business in a Box, downloaded their software, filled out all the blanks, filled in all their documentation, and it gave us this magnificent business plan. Everything we needed to do there. So what used to take us weeks to do took hours to do. Sure, you still had to collect the data, have the figures, but having to sort it and put it together, that's a hard part. And this is why most traders freak out, because they don't know where to start. Well, I tell everybody to start with one basic thing. Start with a trading strategy. Whatever strategy you've put together in your mind, how you're going to make a trading decision, just start with one. 'Cause you're going to find if you write down that simple strategy in step by step process, in just little notes. I'm going to do this when this happens, this and this happens, this one, this. Okay. You're going to find that you skipped a lot of steps. You have lots of data or lots of information you have to fill in. Because when we have a kind of a plan in our head, we kind of fudge it. When we start to put it down on paper, we realize, oh, we skipped over this or we didn't define that. And you'll find that before you finish, in no time at all, you've got that one strategy all worked out. And then you can test it and follow it and keep defining those rules. Okay, you've got it on paper. When I say paper, you've got it in your computer. You've got it with whatever which way you've decided to build it. Okay. Now, that's your first step. So you started somewhere. You've already got a trading plan. You've got your first strategy. So now you've worked it out. You're going to do this. Well, you got to say to yourself, how am I going to set my risk reward ratio? I've decided this is how I'm going to make my trade. Now I want to decide how much money I can risk. How am I going to determine where I have to put my stop loss? How am I going to determine where I'm going to enter the market and where I'm going to exit the market? Well, before you know it, you wrote those all down. Well, now you've got some part of a trading plan. And then you apply that to that trade you're looking at. Now you can go one step farther. You can put your notes when that trade's over. Did that trade make you money? Did you close? Did you get stopped out? Did the markets do what you thought it was going to do? If not, How can I adjust my strategy to make it more successful? How do I filter these down? And before you know it, you've got the starts of a whole big trading plan. You got 8 or 10 or 12 pages of information down. Okay. Well, that's not so bad. Okay. Thing is how do you put it into some type of format that's going to pay off for you down the road? How do you put it in a format that you're going to follow? How do you put it in a format you're going to be able to pull it up? Well, that's where Excel comes in handy. But you have to set up your own Excel sheet. But today, I'm going to show you a way that it can be done. But there, you know, fortunately today, whatever platform you're using, if you're using Legacy FX, you're using, ETX, you're using, a MetaTrader for you downloaded, whoever they will all let you export your trading data in a comma delineated spreadsheet, an Excel spreadsheet. The fact is, but that's only giving you your entry point. When you set up your trade, how you entered a trade, what, if the trade made profit, it's giving you numeric values. But if you started with that and then added your notes to it, column after column, my notes, why did I make this trade? How did I make this trade? Another column is how the results were. Another column is your personal observation. Maybe you want to include in that little spreadsheet, a screenshot of the platform. You decide. But sometimes there's a misconception. You need a highly evolved market knowledge and years of trading experience to be successful. However, we often see that the more information we have, the more difficult it is to create a clear plan. And to be honest with you, I didn't know if I could start setting up from scratch a plan for me because I got 45 years of stuff in my head. That would be awful. I trade from 30 primary strategies. Okay. And to write all those down, and I've already got them, they're already written down. Okay. But if I was going to start today from scratch and start writing them all down, that would be, that's right, like writing a novel. But when you're a beginner or a newbie or you don't have anything written down, you start with something little and let it evolve. So if you don't know where you are going, any road will get you there. In trading, if you don't set out a plan for your trades and develop strategies to follow, you have no way to measure your success. The vast majority of people do not trade a plan. So it's no mystery why so many people lose money. There isn't. When I give you a risk warning, and it says that on this platform, 76% of the traders lost money. When I talk to, do a seminar, do direct one-on-one conferences, people say, Forex or CFD trading is a scam. Everybody loses money. I look at them and say, you know what? You're the imbecile that lost your money. Why? Because you don't think of trading or investing as a business. You don't put the effort into it. You think because you can put a couple $1,000s in an account and read a couple page book, then all of a sudden you're going to get rich and you go throw your money out the door. Now, if a businessman has to spend months building a business plan, an athlete, do you know how much information an athlete has, a professional athlete? You take a professional tennis player, they know every play, every hit, every angle, every degree, and they have books and books and binders, and they sit there and watch reruns of all their last hits. Then they study their competitors. They study they study the courts they're playing on. They study the weather. They study when they're going to play, which way the sun's coming, which way the wind's coming. This is a lot of effort. Sure, Serena Williams makes millions of dollars. So does a professional football player, and they spend weeks rehearsing. They spend weeks in scrimmages. They spend weeks studying playbooks. They spend hours and hours watching the films of previous plays. Then they start learning about all their opponents and who they're going to be up against next week and what the plays are they're going to do and how to outsmart. Everybody has to put the time and effort into. Unfortunately, with online trading, you can just throw money into an account and lose it as fast as you can blink an eye because you don't put the effort in. And if a professional athlete and a professional football or a professional footballer and a professional have to do this and make millions of dollars, why shouldn't you have to do it? So a trading plan should be thought of as a template for trading the markets. Perhaps even more, a better way to describe a trading plan is a checklist. This checklist will contain every aspect of making a trade in a logical step by step sequence that acts as your objective guide to trading the markets. Now, how is that so difficult? Okay, first I'm going to check the economics calendar to make sure there's no events going on that can interrupt my trade. I'm only going to trade these assets because I can't trade 5 billion assets like a lot of you guys want to do. I mean, I sat there not long ago. I was getting yelled at. I mean, literally yelled at by this guy who lost his money. But he was voicing his opinion. And I said to him, okay, show me your trades. Well, I don't have anything written down. Show me what assets. He said, well, I lost money when I traded Google. I lost money when I traded the euro. I lost money in a Bitcoin trade. I said, yeah, that's like telling me you can be a champion or star football player, a star baseball player, and a star tennis player simultaneously. How can you master so many markets and so many assets? Now, when I started trading, we didn't have online platforms. And I was a I was a commodity trader and I traded only livestock. Because you know what? It took all day just to get the information that I needed to have. I had to sit in the pits. I had to listen. I had to wait for the numbers. I had to wait for the reports. You didn't have instant information, and that's one of the biggest problems or fallacies we have with online trading today. Number one, you have access to thousands of assets in every, whether it's stocks, you get stocks, commodities, and cryptocurrency, and forex, and and indices. Some give you, some places you get ETFs, and some places give you bond. So many, and I've just watched unbelievable how many traders trade. I made my entire living when I was young trading. First, it was just livestock. Then I moved over to agriculture, and I spent most of my entire day tracking orange juice and trading orange juice. That was it. One asset. Now, can you be an expert in orange juice, coffee, chocolate, and pork bellies at the same time trading Facebook, Google, and Bitcoin? Well, they're not even associated. So a trading plan will give you a checklist. And one of the things you keep in your trading plan is what assets you will consider trading. You need to decide. It doesn't, you can trade the euro and the euro cross. You can trade 20 or 30 assets, but you can't be an expert. You can't keep track of the charts, the markets, and everything else on more assets than that. You might think you can, but you just can't. And I'm sorry, I don't want to sound like I'm lecturing you, but it's so important because I'm tired of too many traders telling me the markets are rigged, you can't make money. It's not the truth. You have to put the right effort in the right ways to be profitable. And make sure you do your own research and build a plan according to your needs, your confidence level. Select the tools. I don't care whether you're going to use a scanner and a robotic trader. I don't care if you're going to use RSI and stochastics. I don't care if you're going to use an economic scanner. I don't care whether you can use Japanese candlesticks or bar charts. Don't care. You decide what you're comfortable with, what you like. Decide what works for you. Not what's going to be successful in the market. What you like, okay? And then put that into your trading plan and filter it. You know, decide. Make it yours, but then test your plan in the beginning to make sure you're on the right track. Part of your strategy, whatever you want, modify it. You can follow one of my strategies, or you can Huh, that's not a strategy. If somebody gives you a lecture on a different type of candlesticks and what happens when a candlestick does that, that's part of his strategy, but it might be incorporated into your strategy, but you have to understand and make your own decisions. And you want to test your strategy all the time. So take the information from these pros, from these gurus, from these people, but build it into your own. So from there, you can tweak elements that might be weaker and not contributing to your overall goal. Ask yourself the following questions, and the answers to these will assist you in the foundation of your trading. Why am I trading? Is your primary answer to make money? Nope. Go away. Your primary goal to trading is to be successful and to manage your losses, because trading is all about minimizing your loss. Because if you're just out there making money, you're going to make every trade and you're going to base it on how much money you're going to make. You want to create an environment in which profit can be generated. So you should start beginning your trading plan with your strategies. And if you're trading price action, that's fine. If you're trading off key structure levels, fine. If you're trading off of some system that's giving you, even if you're getting automated trading signals, that's fine. This is where you're going to start from. You decide, but what is your next step going to be? What's your step after that going to be? Okay. And then back test it. Make sure that it works. Trade it on a demo platform. And always make sure you incorporate your risk management and your money management into your strategies. So having written strategies with your risk tolerance and money management, it's like having a market blueprint. This blueprint is essential for developing the discipline. It will lead you on the road to success. If you find yourself not following the rules in your plan, then you are deviating from your plan. So you want to match your goals to your trading style. It's completely up to you, but you have to decide who and what you're going to be. Like, for instance, I live in these markets all day and night long. And you know what? If I actually make 10 trades a week, that's a lot. So you determine. You could be a rapid trader. I mean, I've seen guys with 10 trades on going on at one time. Decide how much money, not you have in your account, how much money you're willing to risk per trade. Not today I'm going to risk this and tomorrow I'm going to risk that. How much money you're going to risk per trade? And at any given time, how much money or risk will you have in the total markets? I've met guys that say, I'm not going to risk more than $250 a trade. Okay. But how much are you going to have open in the marketplace? I've seen guys with 10 and 12 open trades in the marketplace, and each one with a risk of $250. Okay. Well, technically, they got $2,500 at risk in the market, because you never know when Donald Trump's going to do something that's going to send all the markets off keel. And you're going to get stopped out on all of your trades, or your whole market's going to go haywire. You know, how many trades are you going to be allow yourself to have active? Okay. How much money will you have? Now, granted, if you've got a $25,000 trading account and you have $2,500 in risk in the market, well, that's not a bad number. It's 10%. But it's really not how much money you have. Whether you're a millionaire or a guy just out of college with a couple $1,000 in his account, doesn't make a difference. Your risk isn't based on how much you have in your account. Your risk is based on your education, your knowledge, your strategies, how much you've been trading, how long you've been trading. Yeah. And then how much money not do you have in your account, but what is your financial network? I mean, if you have $1,000 in your account, but you got an extra 50,000 sitting in the bank at home, or you're making $200,000 a year with, single and no kids, and I'm making $75,000 a year with a wife and three kids, you know, which one of us has the more disposable income? Not how much money we have in our account. How much do we have that we can risk? What is our risk tolerance level? And that's individual based on you. So if you start out with your strategy, a strategy is a step by step, systematic approach to how and when we're going to use tools and developing a sequence of analysis. and the types of analysis we're going to use, and when and how the analysis tools will be used, the time frames to use these tools, the sequence in which we're going to use these tools to do this analysis. Because what we want to do is we want to filter down to only high probability trades. So we want to describe exactly what we're looking for when we do apply all these tools. And then even the type of order we're going to use. Do many of you realize there's a market order, a limit order, an OCO order? There's so many order choices you have. What type of stop loss you're going to use? You can use a trailing stop loss, use a mid percentage stop loss, use a dollar stop loss. Are you going to make stop loss adjustments throughout your trade? But this sequence will lead us to what a high probability trade looks like visually based on indicators in the analysis. And this is how we will trade because dropping the asset in is only a little step. You've got your whole filter system set up. So I'm going to share with you a little presentation about how to start setting up your journal. And then I'm going to show you what data you might want to incorporate into that program. And I know I've told you a lot to start out. Now, I've also given you a handout. If you look on your screen, there's a little box that says handouts, and there's a combined trading plan handout. I put this together for you. It's the most I could get and find for you. There is no software, there's no program, there's no guide or template for this. So I put together for you something, some notes that you can start with. And you'll see in my little presentations here that there's some, the hardest part is setting it up, how you're
should keep in a trading journal. Why is this important? A trading journal records your trading results, allowing you to assess the overall performance of your trading decisions. This information can prove critical, especially in times when you may be experiencing negative results in your trading. During these times, there is no clear reason as to why your trading results are poor. Your confidence can be shaken. You may ask yourself, has the system stopped working? When should I stop trading with this system? Should I just keep trading despite the losses? Not having the answer to these questions can lead to fear and affect your trading. Using a journal allows you to look over previous results and find if there is anything unusual happening in the markets, or whether you are deviating from your system. For the journal to serve its purpose, it is important to record the correct data. This includes a record of all trades you have taken and an indication of how those trades have performed on an individual and an overall basis. Many traders use a spreadsheet because they can be easily analysed and they provide useful information, such as the overall profit and a visual equity curve. An equity curve provides a visual indicator of the overall performance of a strategy. This information can prove invaluable when doubts start to creep into your mind, because a quick glance at the equity curve can restore confidence and keep you on track. You should also record your thought process at the time of each trade, including what you may have been thinking about, how you are analysing the markets, and why you decided to take each trade. It is possible that your judgment is affected by certain things going on in your life, which would be highlighted more clearly when going back over the journal. If, for example, you make poor decisions when something is happening in your personal life, then you will know to avoid trading at such times. It is also important to take a screenshot of the entry and the exit. Not only can you see how well the system is doing by the journal data, but you can also see how well you are adhering to your system when you look back, or whether the system breaks down under certain market conditions. There may be indications from a screenshot that you can use in order to find better entries or to tweak your system.
now. I know everybody's sitting out there saying this is a lot of work. Well, if you realize your trading is a job, You're here to make and earn profit. Okay? And it is work. And it requires you to put the effort in to be successful. You'll realize that it isn't just, oh, look at that. I see that pretty thing on a chart. I'm going to push a button and make a trade. I think I'm going to make money. This isn't a casino. It's not gambling. You're not running through the Las Vegas, throwing your you're putting your $100 on the double zero or on the craps table like see in a James Bond movie. No, this isn't. This is work and it's a job. It's sweat. It's labor, but it does pay off. So the creation of a trading plan is highly useful as it reduces the possibility of bad or irrational decisions based on emotion. If you have a written trading plan, then you have a trading filter that will filter out only high probability trading opportunities. It's important to have a written plan because in order to keep a high level of discipline, you should read it every day. The key to discipline and objective trading is to establish a trading plan where all the necessary rules are there and you stick to it or stick to itness, the word I made up. Then, how do you evaluate? Now, my rule of thumb is I look at every 10 trades to evaluate. But you know what? Over the years, and like I said, I've introduced this at conferences when I do one-on-one classes with beginning trade, and everybody looks at me. Nobody really wants to do that. And if I were to ask 100 traders to send me a copy of their plan, I guarantee I'd never get one. I don't think anybody's ever sent me, oh, this is a spreadsheet I built, and this is a template I built, and this is how I'm going to do mine. Nobody's ever sent it to me. Now, unlike business owners who generally have a business plan in order to provide a strategic vision to employees, or they have to take it to the bank if they're going to get a loan, and they need to understand how much inventory they have to have or what turns they have to have. They need to be able to measure their business and make sure they've taken care of everything. They have to create a business plan. What's a trading plan? It's a business plan. And the amazing thing is in our world, time is totally irrelevant. Do you realize that? The hours you sit in front of that computer, whether you're trading, whether you're analyzing, it's totally irrelevant because you put $1,000 or $10,000 in an account. It's costing you nothing. Yeah, it's not like you open up a store or you decide to start developing an app and your developers are costing you money or your rent's costing you money, and every day that you're not performing is costing you money. You put $10,000 in an account with legacy, it's going to sit there until you make a trade doing nothing. There's no cost to any broker, whatever. Okay, you can trade and spend your next 3 months just writing up a trading plan because time is irrelevant in our world. Because the thing is, the market offers so many opportunities, you never run out of it. It's not like you're developing an app, and if you don't get it developed fast enough and soon enough, the opportunity can be gone, or somebody else is going to come out with one just like it, and your app's can be secondary, never make it off the ground. Our markets offer trades, thousands of trades a day, so you're not losing anything, and you have no costs associated with it. So you can spend all the time doing evaluation. You spend all the time building your trading plan. Spend all the time you want getting knowledge and experience, and trade as long as you want on a demo platform. And then afterwards, evaluate. When you have your strategy, test and evaluate on a demo platform. When you're trading in real life, how do you analyze your real trades? I stop after every trend 10 trades and analyze everything I've done. But like I said, it takes me about a week to do 10 trades. But once I've completed them, I stop everything and do some analysis, some self evaluation to see. And I want to make sure because sometimes the markets are strange. Sometimes they shift one way or another, and the strategy you're using still could be good, but you need to tweak it. But the question is, I use 10. That's mine. That's not for you. So what number of trades will you be stop, will you stop and evaluate your trading activity? And how will you evaluate your trading activity? Keep it simple. Don't make it overcomplicated. No, just identify it. How many assets will you trade? Decide it. You're not locked in for lifetime. Okay? You can trade it month to month, week to week. You can add, you can subtract, but figure it out and figure out your goals and stick to them. Because a goal without a plan is just really a wish. Figure out and start adding. Start with one strategy. You can add more. You don't use one strategy and just tweak it, tweak it, tweak it. You have many strategies. You can have risk off strategies, risk on strategies. Like, I use a basic strategy only when a certain type of market exists. When there's a different type of market, or I see an asset doing something different, I say, I'm going to go pull out strategy 1279 and use that, because that, if I see indecision candles and I see an asset stuck between support and resistance, I can use a different strategy. Okay. You have strategies that fit different assets in different markets and different timings, but you can't start with multitudes of strategies. And then you want to figure out how you're going to place your stop loss, how much you can afford to risk per trade, how you're going to determine where you're going to put it. Not just because some guru said, okay, set it 3 points underneath the lowest swing low. You've got to decide, how am I going to determine where my stop loss is going to be? And I have a whole strategy. When an asset moves in the direction I'm trading and has moved up to a zero line, I move my stop loss all the way up to, and I also sell half of the investment. And it moves up more, I move my stop loss up and sell another quarter. But it's all written down. I follow it step by step religiously. Okay. And then how will we decide when to exit the market? Not, did the markets make us enough money? Not, where do we put our limit order? How do we decide when we're in a market that is turning against us or is not doing exactly what we thought, but we got profit in there? Do I jump out of the market? Do I close my trade? Do I let it ride? Well, maybe you just want to use, when RSI moves into overbought territory, you'll close your trade. You decide. And then, how much money can I use per trade? And then, when to take breaks. So let me share with you a little presentation on what data you could put on your spreadsheet. And then hopefully you'll have some ideas of where you can build this plan. And I'm sorry, like I said, it's like lecturing you, and I don't mean to lecture you, but this is like so important. And it's so hard to get people to understand. It's like, I feel like a father talking to his kids. You got to study, you got to do this, you got to prepare for that. And I want you to understand this is what makes the difference between the trader that goes around saying the market, online trading is a scam and everybody loses money, to the guy who's saying online trading is great and I've been paying for my vacation for the last few years with my trading.
Working with a trading journal. In this lesson, you will learn how to collect and analyze trading data, what you should know after collecting at least 30 trades, what you should know after collecting 100 trades, what are benchmarks, what is a benchmark breach, and what should you do if one occurs. Before trading a strategy on a live account, experienced traders will test the system using a demo account. You can use a spreadsheet to store the data and analyze it in order to ascertain whether the strategy is profitable over a sustained period. In order to do this, you need to record the correct data. First of all, you need to record the time and date of each trade. This is needed so that you can check and reference your trading after your trading session has finished. There may be times where your strategy is not particularly profitable, such as specific days of the week or particular times during the day. You can ascertain this by recording the time and date of your trades. This data is especially helpful to see how the price action looked at the time when you entered a trade on your chart. The next thing you need to record is the currency pairs that you trade. This is necessary in order to know which pairs are profitable and which are not when trading them with your strategy. You may need to remove unprofitable pairs from your system or explore new pairs to be incorporated into your future live trading. Next, you must always record the entry where you place your stop loss and the price at which you closed your trade. Recording these will make it easy for you to check the risk to reward ratio for individual trades and will ensure that you continue to adhere to correct money management. You can also observe, over time, whether your risk per trade is staying within an expected range or becoming higher with individual trades. If so, you can investigate whether this is simply the result of changing market conditions or if you are deviating from the rules of your strategy. It is important for you to record the final results of your trading in pips, percentage gained on the trade, and the cash value. This allows you to keep a check on the profitability of the strategy over time. For instance, you may notice that the system is becoming gradually less profitable. This could be the result of changing market conditions or of not following the rules of your system. Either way, you can investigate whether the strategy is either worth pursuing in changing market conditions or whether you need to make some adjustments to your trading. Now that you have an idea of what to record in your trading journal, we can show you how to use this data further and turn it into meaningful information. Firstly, you can assess the combined overall profit or loss of the system. This is essential in determining whether the strategy is profitable overall. This will help you through losing streaks because you can refer back to the overall profit for confidence.
Now, that's a very important point. Okay. If we understand that trading is all about risk management, minimizing your losses and maximizing your profits, a strategy isn't going to make you money every trade. The question is, I've used this strategy 10 times. I've had 8 losing trades and I've gotten each one of those out, each one of those with less than $100 loss. So I've got $800 losses. But the two made me $1,200, the two successful trades. So I netted out $400. Okay, is that a good profit to loss ratio for that strategy? No. Okay. But if I got 6 losing trades and minimized my losses, and I had 4 successful trades, then and I've actually netted out profit. Well, then, and after we've used that strategy for several months, and we see that overall statistically, every 10 trades, I was doing this. And then when I added up 30 trades, okay. That way, when you're in that realm, because it doesn't always give you 6 losing trades and then 4 winning trades, it might give you, or it doesn't give you 2 losing, 1 winning, 2 losing. So when you're running down and you've got 6 losers in a row, you're not going to panic and get out of it because you say, now I should get 4 winners. Okay. But when you see it shifting to you've got 7 losers and 3 winners, you got 8 losers and 3, even though you've made net profit, for some reason you're getting too many losing trades. You know you need to go in and tweak that strategy. You can only get that from your trading journal. Okay. So you start out with your trading plan. You build that around your strategy. You add in your data and you got your journal in there. And then you have your entire trading package. And this is your entire trading plan. And like I said, the best way to get started is to start out with your basic strategy, whatever you're doing now, but just put it on paper. And like I said, when you start putting it on paper, you're going to realize I'm overlooking steps or I haven't defined a step, or in my mind, I have it worked out, but it doesn't work out when I write it down. And you'll find that you're just simply by writing it down, you're defining it and making it better for you. So on that note, I'm going to say goodbye to everybody. Make sure you click on that download button and download that handout I gave you, and it'll give you a good starting point or some things to think about. And we'll talk to you again real soon. If you do have any questions and you want somebody to help you through it, if you contact Legacy FX, just go to www.legacyfx and use their live chat button or send them an email. So they'll have a financial analyst talk to you and who could help you start off on the right foot. Thank you very much and have a great trading day. Bye now.